Welcome to the Tesla Economist. Please hit the thumbs up and remember to subscribe. I just wanted to go over this recent dip we just had, a Tesla flash crash, partly due to Elon still selling so many of his shares, but then also the macro environment with Omicron and how that spooked the market. Congratulations if you managed to buy that dip. That was a nice one. I'm not sure many of us expected that. I was actually worried it might have been worse. There were some really spooky looking indicators showing a few red flags, but it looks like we're okay and we'll live another day. Remember, we're still on this dip that's been perpetuated by Elon's selling as well. I think he's only about 2/3 the way through his sell-off. He has been exercising his options as well, but that doesn't counteract his selling. As these shares were already allocated, he is not buying them through the market. But I was actually a bit spooked on this dip. It was a macro dip. I'm always confident in buying more shares on a dip if there is some internal issues with Tesla, like delays or the typical FUD. I believe in this company. The economy, however, well, that's a different game. We're still in very crazy times. The macro scares are a little bit similar to Russian roulette. It would seem like this one had an empty chamber. At least it looks like that way for now. But eventually there will be a live round and it will go off and we will enter a market crash. When will that be? We never know. But it always happens. Markets don't stabilize after a big run, they crash every single time. Markets keep rising and then drop and get rid of all the bad money. The bull goes up the stairs, the bear goes out the window. It's like riding a bike. If you're moving fast enough, you're fine, but if you slow down too much, you lose your balance and you'd fall off. Markets can really only keep going up at the rates we've seen or they crash, and this crash might be a bad one. Given how much the central banks have printed and how low interest rates are already, Keynesian economics will not work this time, and this is partly due to modern monetary theory. MMT needs to destroy money that was created by the governments. It's meant to be destroyed by taxing citizens. Anyway, if we're in a crash, it could be tough. We might see stagflation again even, but I don't like to predict too heavily on what will happen. Just point out potential scenarios, as no one can ever guess what happens, which is the real important lesson. Same with the future of the EV industry. I try and run through as many potential scenarios as I can possibly see coming and entertain them. I also get great feedback from my valuable listeners. But equally, perhaps Omicron makes COVID far less severe. We can all go back to work and live our lives like normal. Supply chain issues are fixed, and we end up seeing a massive boom for the rest of the decade. We can't predict the future. I'll never pretend that I can, but there are some futures that do look more likely than others. Like Tesla never having any competition. Yeah, I don't think we need to be that diplomatic anymore about all the others attempting the EV market. They're doing what they can to provide electric zero free emission transport, but they just aren't Tesla. Anyway, this is the market. It will continue to get spooked along the way. It is expecting a crash because it knows one is coming. The main issues would be the banks collapsing, something similar to what we saw in the global financial crisis causing the Great Recession. This is nothing new and has happened many times before. To be honest, if we hit a bad recession, I think our best chance of coming out of it will be the EV industry, and likely namely Tesla. If it's going to be as big as we all think, it's new industries that help create jobs. If Tesla is going to be a $10 trillion company, that is huge, let alone potentially $30 trillion. I don't know, maybe Tesla is just my answer to everything. Anyway, this was a little bit of a wake-up call for me, being exposed, naked, out there with long investments and nothing hedged or short. I've talked about this several times. I had a bad feeling about this dip and had some remorse that I had nothing short. Like I say, I'm not trying to cover my Tesla portfolio in a crash, just cover my expenses during a downturn economy in a worst case scenario to avoid me having to sell any Tesla shares. We have previously explored how Tesla reacts in a recession, and it likely will be okay. It also won't get hurt anything like as bad as it did in the COVID credit crunch, as Tesla is now a highly profitable company. It was still making losses back then. I think Tesla will keep selling cars through a recession, at worst perhaps lose some margin by reducing prices, but all the competitors will be in much bigger trouble given that they all run at losses currently. I'm not saying I want all the competition to go under or anything. I'm all for an electric future. I'm just saying Tesla is in a different league and can weather a storm, the others not so much. But these down economies tend to last about 2 years until they go into recovery. They always like to say, but this time it's different, because each time it is different. Which is why they also say, history doesn't repeat, but it rhymes. Well, not they, that was Mark Twain. But we do have crypto this time around, and how that will act in a recession will be very interesting. Generally, a lot of investors like to turn to gold in these sorts of times, as it's known as a store of value. in that gold is not affected by the ups and downs of the economy. Gold is chosen due to its unique rare properties and scarcity. But Bitcoin beats it on all those fronts and may end up replacing gold as the main store of value. Gold has a valuation of approximately $10 trillion in the economy, and Bitcoin usually around the $1 trillion valuation, so it has a while to go still. But Bitcoin is likely to take off again. It has a lot going for it right now. Anyway, when these sorts of events occur, it's either a dip or a crash. If you bought the dip, then you did well. It's not always easy, especially to go against the narrative of the media at times. Like when I was buying Leaps in the $500 earlier this year, there were people telling me it would drop to 100 or 200. We even had Michael Burry, amongst others, betting against us, and he has a reputation. I'm in no way saying it could drop to 500 again. Tesla has provided more evidence on the solidity of their fundamentals since then with their Q3 earnings report, along with other various events hopefully unfolding soon. Hertz seem to have provided a lot of validation to the market too. It's not always easy finding a conviction at these times, but that's what makes a good investor. The main concern here was if we had to go back into lockdowns again and more supply chain issues, the market would have needed liquidity, but the central banks don't have as much gas in the tanks this time, so may have not injected liquidity back into the markets, which means people would have to sell equities and could have crashed the market. As you're witnessing yourself, we're seeing inflation rampant. If the banks ended up printing more, then we would have even more inflation. No, it's not the greedy corporations charging Americans extra at Thanksgiving, which is what Elizabeth Warren has been saying. It's mismanaged monetary policy. Governments don't seem to ever like to take the blame. I really have no funds at the moment. I'm really stretched and already bought the last dip. I probably should leave myself more liquid. I want to get my insurance policy sorted too, and then I hope to start trading through these ups and downs. One of my Leaps is actually expiring in March, which I don't have the funds to exercise, unfortunately. It has a strike price of $700, and I bought it out of the money at the time to give you an idea of how well it's done, but I'll likely sell that around the time of the earnings report in January. Whether it will be before or after, I'm not sure yet. In my experience, the stock price builds up before the earnings come out, and then it drops a little. And then over the next 2 weeks, people work out just how good the earnings were, and the stock price ends up rising. Think about how we insure our assets, like our cars in case of a crash. Well, for a lot of us, our Tesla stock are worth more than our cars. And like I say, I am not doing this to try and make a profit or trade or even cover what losses I may see in Tesla. It won't come close. I just want to make sure I can make my mortgage payments in case things get bad. These are the times you never want to have to sell an asset. Ideally, it's the time you want to buy assets. Although when the economic environment changes, it can be harder to have the same conviction. These are what contrarian investors do, like Warren Buffett. Why do you think Berkshire Hathaway has so much cash on hand? Buy low, sell high, when there's blood in the streets, buy property, etc. Just like Getty and Rothschilds, to name some others. The thing is, at the same time, your purchasing power of cash is dwindling through inflation. When they finally buy in the crash, will they be buying Tesla at $800 down from $1,500, or will they be buying Tesla at $2,000 down from $3,000? No one can predict the future. There are too many variables. Thanks for listening. Please hit the thumbs up and subscribe. You can follow me on Twitter and talk to me on Patreon.